Hey guys, hope you're well. It's Alessio. I'm just going to give you a quick update here in this video about what's happening in the financial markets and what could potentially happen next. And this has actually been, guys, last week was by far one of the most interesting, most terrifying and fascinating weeks in stock market history. And I would say also in Bitcoin history too as well. But anyway, as far as the financial markets are concerned, as far as the stock markets are concerned, last week, by the way, guys, I want to ask you this question. Have a guess as to what was the most similar crash in history to the one we had last week in the financial markets. Answer, none. And by the way, guys, that is not just my opinion. That is supported by facts. Jason Geppert of Sentiment Trader, who looks at statistics, he looks at the history of the stock market. He has found no example in history that resembles what happened just last week in the stock markets. There is absolutely nothing like this whatsoever in history. So what happened last week was essentially a once-in-a-generation event. And now I know you're probably thinking, well, hang on a second, what about 1987, the 87 crash? What about what happened after 9/11? What about the Wall Street crash of 1929 or the 2008 crash? No, guys, nothing like this. Now, it is true that Jason did say that the closest thing to what happened last week was probably the 1929 Wall Street crash, but with a difference. The fact is that the initial drop in 1929 was not as extreme or as fast as what happened last week. So essentially, guys, what happened this month or last week in the stock markets, or the last few weeks, I should say, the last couple of weeks in the stock market, was nothing like what's happened in the history of the stock market. So March 2020 is one for the records, one for history. So guys, I can tell you this much: future generations will come back and look at what happened this month in the last few weeks, and they will probably be astonished by what happened. In fact, probably future generations will use what happened this month in 2020 as something to learn from. And actually, guys, everything got sold last week. It wasn't just stock markets got sold. Bitcoin got sold, gold got sold, bonds got sold. Pretty much everything across the board, guys, got sold. And that's usually what happens when people are afraid, when panic grips the market. People just panic, you know, like people are human beings and we're all thinking pretty much the same, I guess. And yeah, it's called herd mentality. I mentioned herd mentality before to you guys, which actually brings me to my next point, by the way, guys. As I mentioned in a previous video of mine, I said that one of the biggest warnings given to us by one of the greatest philosophers that ever lived, Friedrich Nietzsche. Nietzsche warned us about the dangers of herd mentality, because when the herd goes one way and everyone pretty much is going one way, they're panicking. We should stand aside and be cautious because they're probably on the wrong side. Now, I know I hear you. Some of you are probably saying to me right now, well, Alessio, of course everyone's afraid. Of course everyone's panicking. Look at the news. Everyone's talking about it, right? This whole pandemic story we're hearing about. Guys, one thing I've learned from my own experience, and one thing that I think practically all experienced traders and analysts will agree on. Listen, if you're an experienced trader or analyst, I think you'll agree with me on this, that often what we think is going to happen next in the markets, because of all what the media is telling us, is not what actually happens. So the story right now in the financial media is we should be scared. Everyone's panicking, therefore we ought to be scared too. And that, oh, it's the end of the world. You know, everyone should be absolutely terrified, panic. And that's why everyone sold last week, by the way. Everyone's terrified. People are human beings. And I actually think what happened last week was capitulation in the stock markets. I'll explain to you more about that in this video. But essentially, guys, history has taught us that when the media or when the general feeling in the public is that something is going to happen, the opposite actually happens. Let me give you an example. In 2016, after the Brexit vote that we had in the UK, a lot of the financial media were speculating that this could be the start of a major crash in the stock markets. I have to tell you, even I myself at the start thought the same thing, but the opposite happened. Markets quickly recovered, they bounced back and rallied much higher. So the exact opposite of what everyone expected happened in 2016 after the Brexit vote. In 2016 also, when Donald Trump became president, before Donald Trump became president, people were saying in the financial media, oh, it's going to cause a major recession that year. Financial markets were going to crash that year. That didn't happen either. Actually, markets skyrocketed in 2016 to 2017 and 2018. So bottom line, guys, is that often what we think is going to happen, or in other words, what our instincts, what our heads are telling us, is probably the wrong thing. So that's why we have to think objectively. We have to think without emotion as much as possible. Put aside what the financial media is telling us. Put aside our own fears or whatever we might be thinking in our heads, and just look at the charts and try and be as objective as possible. Again, guys, as I mentioned before, we have to make decisions based on what we see, not on what we think. In other words, we make decisions based on the charts. The financial media definitely has scared people, and I think last week we saw the final stage, probably the final stages of capitulation or panic in the markets. Now, look, could the markets go probably lower in the next few weeks or next couple of months? Possible, sure. But to me, it doesn't really matter because I think that last week's drop was probably a signature capitulation on the stock markets. And I think practically anyone who wanted to sell sold last week. And I want to show you a few charts here, by the way. Take a look at this chart here on my sigma. Sigma is a mathematical calculation, and notice what happened here. We went from a massive bull market, dropped down into a massive bear market. As a matter of fact, we went from the highs there on the S&P into the red extreme lower zone, into the lower extreme zone on the sigma. And typically when something like this happens, when the markets go from an all-time high, from a bull market, rapidly and extremely into a bear market, and especially when it goes into the red extreme lower zone, like we see here on the charts, that usually causes a major bounce, often a rally, multi-week rally in the stock markets. Let me give you a few examples. A good example is what happened just in 2018. In 2018, we saw a similar drop, massive drop into the lower extreme red sigma zone. Capitulation occurred, people gave up, and pretty much we saw a rally, a bounce off that move. So that actually ended up being a pretty good signal back then. Let me show another example. Another panic drop in 2015, 2016, and then we saw the market go into the lower extreme zone, had a bounce or a rally off there. It might have actually tested it again, but then essentially it rallied off from there at that point. Here's one from me in 2011, similar kind of situation, went from a high and then dropped down into the red extreme, lower extreme sigma zone, and then bounced and rallied from there. Here's another example for you. This one back in from 1987. I don't know if you can recall 1987. I was only 10 years old back in 87. Back then, markets dropped phenomenally into the lower extreme red sigma zone. Capitulation occurred back then, and eventually markets rallied off, bounced off from that point, ended up being the bottom there on the markets. I'll show you a few more examples here from 1960s. If you can have a guess at what the reason was for this 1960s drop, bonus points if you said Cuban Missile Crisis. Yes, guys, the Cuban Missile Crisis in 1960s dropped the stock markets into the red extreme lower zone, had a bounce, rallied from there. Here's one for you from the 1940s, 1940 to be exact. Have a guess as to what caused the markets to panic and drop into the lower extreme red sigma zone there. What crashed the markets in 1940? May 1940, I think it was, or June 1940. Bonus points if you said that that was the time when Germans invaded Paris. So essentially the German army managed to invade into France and captured France. So people panicked. People thought it was the end of the world, right, back then. Let me show you a few more examples. The famous 1929 Wall Street crash. Again, look at this. Now you can see here in 1929, we had an initial drop into the lower extreme red sigma zone, and then eventually had a bounce from there. So bottom line, guys, I personally think, given what we're seeing right now in the stock markets, given the extreme massive drop from a bull market into a bear market and eventually into this red extreme lower sigma zone, the red sigma zone, as you can see, this to me signifies potential capitulation occurred last week. And look, does it mean definitely that the markets cannot go any lower? No, it doesn't mean that. Markets could go lower. Again, anything is possible. But again, we're not thinking about possibilities here. We're thinking about probabilities here. So the question is, what is probable, not so much what is possible. Is it possible markets can go lower? Yes, of course. But is it probable? I would say on the balance of probabilities, what we're seeing right now in the charts and what we've just looked at historically shows to us there's a higher probability on the balance of probabilities. There's a higher probability for us to see a bounce or at least a multi-week rally in the stock markets. So that's what I'm looking for right now. I think more likely on the balance of probabilities, we're likely to see a bounce or some kind of a rally in the stock markets rather than further drops in the medium term or in the short term. The big question, though, is this. Let's say we get this bounce. Let's say we get this rally. What happens then? I mean, that's the big question, right? And I got to tell you, nobody knows the answer to the question. Because, first of all, we've never had a crash like this in history. Secondly, we've hit bear market territory. Thirdly, we had a recession warning last year. You guys remember my video from last year? We had the inverted yield curve, which, by the way, was the first warning we had. Something wasn't right last year. So we've had all these warnings last year. And the question is, okay, we've had this massive drop, probably going to have a rebound, some kind of a rebound rally, reversion to the mean. But what happens then? What happens next? The big question is, obviously, we don't know the answer. Nobody knows the answer. What's going to happen potentially after the rally, after the bounce? Are we going to head into a recession, in which case we'd have probably another drop lower? Or is this going to be a recovery rally that goes up into an uptrend? That is a big question. And I think let's wait and see. I think at the moment we have too little information to go on. Let's wait and see what happens over the course of the next few weeks and next few months. And I think we'll find out the answer pretty soon, perhaps in the next few weeks and next few months. But it's going to be really interesting in any case, and I'm looking forward to see what happens. All right, guys, hope this video has helped. If it has, please give it a thumbs up, and also please subscribe for future videos as well. Look forward to seeing you in the next video update. And guys, please stay safe, stay healthy. And again, I hope and pray for all your families. I hope they stay safe as well. So thank you very much indeed, guys. I'll see you soon. Bye now.